was it marketing power? What was it that they got so right this time?
Well, you know, the Modelo brand has had a lot of momentum on a multi-year basis. One, it's growing off of a small base. When you compare it to a brand like Bud Light, Modelo really still is in its nascency. Number two, I think they've really been able to reinforce the authenticity of that brand, where both Corona and Modelo are Mexican brands. Modelo over-indexes to actual acculturated Hispanics in the United States. And so a lot of that advertising on Spanish language media, but also expanding into a more general audience, and the sports tie-ins have really worked.
Is there a lesson here in how they drove Modelo for other large consumer goods companies that are struggling with sort of that same thing where people just don't want the big generic brands that people have been either eating or drinking for the last 50 years?
I think it's all about leaning into consumer segmentation. When we do our own proprietary survey work, we can see that both the Corona and Modelo family of brands over-index with 18 to 34-year-old consumer, or in the case of alcohol, 21 to 34, where legacy brands like the Coors family or the Miller family really over-index to older consumers. And we like to say that your experimenter of today is your committed consumer of tomorrow. So if you can get those young consumers benefiting from demographic mix shift, right, especially with more Hispanics in that younger age cohort, that's what you lean in on.
Talking about the experimentation and leaning in on that, I mean, Constellation has taken the plunge into cannabis-related products, of course, by taking a big stake in Canopy. And you were saying really that actually they were pretty clear about their stance on how Canopy's been performing thus far.
Yeah, I was quite pleased to hear Constellation CEO Bill Newland say, quote, he was disappointed with the last quarterly results from Canopy about a week and a half ago. The street was too. Canopy's stock was down. You're starting to see Constellation shares trade in tandem with Canopy, given the magnitude of the investment.
Right.
You know, they're the single biggest shareholder. If they're disappointed, they need to come out and say that, because what it does for Constellation shareholders is really reassure them that there is a fair amount of oversight on that investment.
So you wrote in a note last week that while sales for Canopy are doing fine, they're really spending money like crazy. Now, in theory, this is a big growth business, so why not spend? Is the suggestion that maybe there isn't as much bang for the investment buck right now as there should be?
I think Constellation Management is generally pretty sanguine about the deployment of capital against a global opportunity. You know, they didn't lose over $90 million in EBITDA just in Canada, right? There are so many international markets, including the United States, from a hemp-derived CBD perspective that Canopy Growth is pursuing. I think what Constellation really wants to show to prove out their thesis is that profitability in Canada is absolutely attainable, as is the $1 billion in run rate revenues that they've been guiding for many months now.
You interestingly you cover this space in general, the cannabis-related space, and your sort of more favored one is Aurora, right? Because they're actually seemingly on the profitability path that much faster. What are they getting right that perhaps Canopy isn't?
Yeah, so their cost structure in terms of cost of goods sold per gram of cannabis is just better. So that obviously just flows through right down to the bottom line. And they're not making as many international bets. They're quite internationally focused, but the size of their bets has been a bit more judicious.
Going back to the pure Canadian market and the question of whether Canopy can achieve profitability, is it largely about that cost of goods sold, or is it other aspects of the market structure in Canada, the number of competitors, the take that the provinces get, that really stand in the way to sustainable profitability?
It's about getting your cultivation up and running so you can get some operating leverage and really drive down that cost, because Canopy's reported gross margin last quarter was 16%. It was 40% if you strip out all the stranded overhead that hasn't yet been utilized. We were pleased to hear the CFO of Canopy Growth, Mike Lee, really reiterate the pathway over the course of fiscal 2020 to get to that 40% gross margin in the fourth quarter.
Going back to how they got into bed with Constellation Brands, and when does this start to reap rewards for Constellation from your perspective? It's already clearly gone all in, but when do we start to see the CBD-infused drinks, or the drinks that perhaps will in some way cannibalize their own demand for Modelo and the like?
Well, the good news for Constellation Brands is they don't sell beer in Canada, so it is truly incremental to them, but it could be disruptive to the number one beer player in Canada, Anheuser-Busch InBev, or the number two player, Molson Coors. But it's really all about learnings and incremental growth for Constellation Brands. We did think think on the call today that Constellation CFO David Klein might have tempered a bit, and we called this out in our note, the EPS accretion target for the end of fiscal 21. They were, pretty clear in explaining why. They're absolutely committed to helping Canopy achieve the appropriate margin targets in Canada, but the momentum in terms of international opportunities availing themselves to Canopy growth might be a driver to push out that EPS accretion.
Now, I know the Canadian government, they recently came out with regulations for other forms of cannabis besides just the flower, including edibles. How big of a deal is that going to be for the next stage of growth in Canada?
If the Canadian consumer looks anything like the U.S. consumer, it's going to be pretty meaningful. Flower is the biggest category in the U.S., but it has been the single biggest share donor. If you look at a really sophisticated market like California, vapor is actually 30% of sales.